As the dust settles on Donald Trump's presidential win, it has become clear that inflation played a critical role in the outcome of the election. But now companies and investors are fretting about how the new president's promises to apply tariffs on foreign goods, begin mass deportations, and cut taxes could revive inflation in a more dramatic way. How can businesses prepare for such a reality? Or will Trump make these changes in a more performative way? This conundrum, which has implications around the world, is the focus of this week's Viewsroom. Welcome back to the Viewsroom, the weekly podcast that invites you, the listener, into a lively discussion with Breakingviews columnists to discuss the biggest stories of the week. And I'm your host, Amy Donlan.
And I'm Jonathan Guilford. Amy, I think nothing really sums up the sort of tension here at the heart of markets than I was on a earnings call listening in earlier this week. One of the large private equity firms, all of them saw their stocks rip after Trump's election. Everybody getting very excited about, M&A is coming back, maybe rates are coming down, etc. And one analyst just popped up to ask, so have you modeled the effect of tariffs and immigration restrictions on your portfolio companies? And it was the weirdest moment. It was this euphoria, and then in the middle of it, somebody was like, are we checking with reality here for a second? Obviously, I know you've been in Texas talking to a lot of businesses kind of in the election season. Like, do you feel this sort of cognitive dissonance?
Well, absolutely. And I think definitely in Texas, I guess I was expecting, given what was discussed during the election, I was expecting to see a lot of these like tent cities with lots of like illegal immigrants everywhere. The only thing that you could really see in Texas was a lot of construction, like an enormous amount of construction, building everywhere, apartments, office buildings. And what I was being told by businesses down there was that a lot of the workers were actually coming from the border, coming from Mexico. So yeah, I think it was difficult to square that idea of you deport all of these people who arrived into the US and then somehow you're going to bring prices down. I think that is something that people were kind of struggling to get their heads around, and construction companies particularly were very worried that they would lose a huge amount of workers. So I think we're lucky, Jonathan. Obviously, we have two people on our team, Francesco Guerrera, who is the global head of economics, as well as Gabriel Rubin, who we know as Gabe, who is our political guru based in Washington, D.C. So Francesco and Gabriel, you're very welcome.
Nice to be here. Thank you for having me.
So Gabe, as we said in the intro, inflation seemed to be a huge part of this result that we saw, which I think really caught a lot of people by surprise. What do you think it is about Trump's solution that people really kind of connected to? Because as we've just said, and Jonathan was just saying, it's hard to see the connect between what he's saying and what the outcome would be.
Well, I think when you look at the results globally, you see that the high inflation that came as a result of the pandemic and the responses to the pandemic have led to broad discontent, voter discontent around the world, and you're seeing incumbent parties get thrown out. Both conservative, right-leaning and left-leaning parties, thrown out of power across the world. Or even in India, Modi not getting the majorities that he had previously. So there's definitely an anti-incumbent feeling in the world that is caused in part by high prices and people feeling like they can't get ahead and can't afford to make a good life for themselves. In the U.S. specifically with Trump, Democrats sort of deluded themselves perhaps into thinking that because inflation, the annual rate of inflation, what we see in CPI reports, was what people were feeling. But people have sticker shock. People go to the grocery store, people, want to repair their car, or people want to buy a home or, think about buying a home one day. And they just saw these prices go up so much and make having a good life really unattainable on their, or feel unattainable, even if their wages were going up a bit and keeping pace with inflation. So what Democrats really sort of ignored here was the consumer confidence readings, which have been very low, and the fact that even if Trump was offering sort of pie-in-the-sky solutions that people might not actually like, he was at least addressing the anger that they felt towards high prices and the fact that, inflation has, destroyed governments throughout the world.
Right. And I mean, as we look ahead to the next Trump term, I mean, Francesco, what is the inflation situation that he's inheriting? Obviously, we had a little bit of a surprise this morning to the upside in the US, but generally we're much nearer to the Fed's target than we were before. Policy mix has an impact on that. But what are investors thinking right now?
Well, it's interesting because the level of inflation, as Gabe was saying, is actually much higher, right? If you look at how much prices have risen since the last election, I checked this earlier today, it's been 22%. So prices in the United States are now 22% higher than they were in 2020. So that's obviously a big jump in prices. If you look at the rate of growth, as you say, it's converging towards the 2% a year that the Fed is targeting. The irony in all of this is that whereas, Trump benefited from the perception that inflation, the reality that inflation and prices had gone up, his policy, at least the ones that he talked about, would be inflationary. So imposing tariffs of 10% on all imported goods in the United States and 60% tariffs on Chinese imports into the United States would be massively inflationary. Taking 11 million people out of the workforce because he wants to deport, or he said he wants to deport all illegal immigrants, adult illegal immigrants, that would have a massively, be a big shock to the labor market and will drive wages up again, and that would be an inflation shock. So investors at the moment are actually enjoying the idea that the economy under Trump will be hot, because if you look at the assets that are growing, these are stocks, there's Bitcoin that is going very well, and the dollar, right? So in the moment, they're actually thinking about the good effects of high inflation. There's also terrible effects of high inflation, which, of course, the fact that the Fed will have to keep interest rate high, and that will choke off economic growth, and the fact that bond markets could be very, very unsettled, and that, again, has a terrible impact on other asset classes.
I think that is really interesting. And Francesco and Gabe, I'd love you to maybe both answer, maybe Francesco starting with you. I mean, is there a way to square this circle, though? Can you enact the kind of policies that he's talking about, that Trump's talking about, and actually bring down prices? Is there a soft way of doing these things that isn't as, as I said, sort of performative almost, that you make some sort of gesture on immigration, but it doesn't bring down the numbers in the way that people expect it to, but it sort of looks like you're doing something?
Yes, I mean, it would have to be to stop very short of what he said he would do. So, for example, the idea that deporting 11 million immigrants is practically impossible because of the administrative cost of it, the difficulty in finding immigrants, the idea that you could find all these people and put them in detention centers for a long time before they get deported. It's very difficult to imagine that. So you could perhaps discount that and say that that's not going to happen, or that it's going to happen to a much lower degree than what Trump has said it would happen. The same with tariffs, right? So he's talked about this 10% tariff on all imported goods. Maybe he does 5% on some imported goods, and maybe it doesn't do 60% on tariffs on Chinese imports. And that all of that would have an effect which would be commensurate lower on inflation. Directionally, those are still inflationary policies, though. If on top of that you include the fact that he's also pledged to keep tax cuts, which he hasn't said how he's going to fund, that is going to lead to a wider budget deficit. That's also problematic for bond investors, and that also, although not directly inflationary, could cause a lot of uncertainty in financial markets. And as we know in Europe, from the Eurozone crisis in 2009 and 2010, as we know from the UK, from the 2022 example of Liz Truss premiership, markets can dictate government policy when they get very nervous.
Yeah, and just to add on to that, there was a study done, to your point, Jonathan, about, have models been done on this? There was a model that was done in 2015, as Trump was running for president the first time, that estimated that deporting all, at the time, undocumented immigrants in the U.S. would have been a 1.6 trillion hit to GDP, and the entire process would take like 20 years to even. So that was done by a conservative group, so they had no incentive to sort of keep the estimates low. So we don't know if those numbers would pan out. I mean, it's a mind-boggling situation to even try to think about, not even addressing the humanitarian issues of all of it. On the tariff side of things, on the trade side of things, Trump in his first term used high tariffs as a negotiating tactic. He used, the threats to get out of trade deals, to, destroy NAFTA as a way to get other trade deals. There is a USMCA, which is a trade deal with Canada and Mexico that currently exists, which was negotiated, by Trump's administration. So as an opening gambit, it may make some sense, but if he ends up actually moving to impose high tariffs, then that will obviously have the inflationary effects that Francesco was just talking about.
Right, that's the thing, and it's like, I don't know, you can begin to spin yourself into endless hypotheticals here between, just like you say, the humanitarian horror of a mass deportation campaign plus, if inflation really does get sparked, like what kind of bizarre, like long tail political outcomes do you get to? But I mean, pulling it back a little bit and trying to think more simply, I know, I think it was the folks at Nomura kind of put a 0.75 percentage point estimate on like one-time inflationary bump from the tariffs that have been put out there. That seems like it would constrain the Fed. But then you get this odd two-speed world economy, it feels like, where the US is suddenly back to fighting the inflation battle and everybody else isn't. Like, is that the right way of thinking about it? Or would inflation have some other effect worldwide? I'm just trying to think of like what this means for the ECB, for the People's Bank of China. Like, it seems like an odd situation to be thrown back into.
Definitely. And one of the things we have to sort of figure out from the U.S. side of policy is, does this lead to, a race to the bottom in terms of retaliation globally, retaliatory tariffs, retaliatory trade policies, or and also, is the U.S. able to sort of build up capacity in these strategic industries that you would be putting some tariffs on? That's less of an issue with across the board tariffs because that's not just targeting strategic industries; it's targeting everything. And then another thing to keep in mind with these higher tariffs is that a tariff is a one-time charge. Inflation is a sort of process wherein prices continue to rise. So do you get one step up where prices just jump up and then stay there? Almost definitely not. But it is a different inflation dynamic than we're used to that requires a different type of thinking than perhaps a supply chain a more traditional supply chain disruption. Like we saw during the pandemic.
I thought you were going to say something, Francesco. Yeah, go ahead.
If you imagine a situation where the US does go first in a tariff war, it's unthinkable, as Gabe said, that the rest of the world, particularly the other big blocs, so China and the Eurozone, would not retaliate. So that would essentially mean a contagion spread of inflation throughout the world. The main difference between the US and, say, Europe is that the US is already growing very fast. It's essentially a full employment, so the economy is already very hot, right? So you're increasing inflation in a very hot economy has the potential to increase inflation even more. In Europe, the situation is actually the opposite. So you could be facing a period of stagflation in which inflation goes up because of the tariff, retaliatory tariff that they impose, but the economy is growing very slowly. So that causes a problem for the European Central Bank in that they cannot lower interest rates if inflation is high. At the same time, if they don't lower interest rate, they don't stimulate the economy. So Europe could be in an even worse situation than the US. And that's really, if you think about it, the overarching advantage the US has going into this incredibly uncertain period is going into this uncertain period in which we could see a trade war, we could see inflation and so on, with a very strong economy, a very healthy labor market, and very, very low inflation. So in that respect, Trump is lucky. It could still go wrong, but the US is in a much more advantageous position than the rest of the world.
Yeah, two things that the US has going in its favor, sort of entering this situation, are the fact that it has a central bank that sort of managed to come down from inflation about as well as it could have, and the fact that Francesco just said that it's growing faster than other developed economies. Trump could potentially, on growth, potentially some of these deregulatory things and tax cuts, will lead to sort of a spurt, perhaps a sugar high of growth. So that might not be the issue. But, if Trump starts to meddle with the Fed and, perhaps, appoints someone who is, less independent, when Powell's term is up in 2026, you could end up with a stagflationary situation in the U.S. too, where inflation gets high. They refuse to, the Fed, if it's enthralled to a Trump administration that wants to keep rates low, would not raise rates to stem high inflation. And as a result, you end up with a stagflationary situation that's somewhat similar to what you saw in the 70s in the U.S. And that's a growth killer long term unless you get prices back under control. So the risks here are, abound, even if the U.S. is starting from a slightly more advantageous position with its growth rate right now.
And I suppose the other thing I was kind of curious about, Gabe, is there is an interesting story obviously going around about the budget, right? And how Trump plans to cut the budget. And again, I wondered if you could just walk our listeners through how, again, those numbers might stack up, or what is a realistic outcome from his sort of plans for the budget.
Yeah, so here the numbers don't really add up, frankly. So just a little background here. So Trump has tasked Elon Musk and Vivek Ramaswamy for people who might not be aware of him. He briefly ran for president on the Republican side, technically a Trump challenger, but very much a Trump acolyte. He's a pharma executive and made a lot of money in the pharma sector, and now has been appointed alongside Elon Musk to run this new thing that Trump is calling the Department of Government Efficiency. If you follow Elon Musk, you can understand what that acronym is alluding to. His cryptocurrency, or at least it's the same letters, DOGE, yes, this is the world we live in now. So it's not really a department. They're just sort of consulting with the Office of Management and Budget, but the goal is to cut $2 trillion in annual government spending. Now, the problem with that is that the discretionary budget of the U.S. is about $1.7 trillion in annual discretionary spending. So in order to do that, you would have to literally cut the entire budget plus $300 billion more dollars. So that involves cutting things that Trump has promised not to cut, entitlement programs like Social Security, Medicare, and Medicaid, which are not considered discretionary because they're guaranteed. So in order to cut that much, he'd have to make deep cuts into entitlement programs, which would be very unpopular and would break a campaign promise. So I don't know how they're going to square this circle. I don't expect them to get anywhere near the $2 trillion number, and I expect this to resemble the sort of blue ribbon commissions of the past, Simpson Bowles or the Al Gore Commission in 1993, where they, find government programs, grants or whatever for, research that they find to be sort of superfluous or things that the government shouldn't be doing, and they'll cut those, and perhaps they'll go significantly further. But the idea that they're going to start cutting $2 trillion a year in government spending it makes absolutely no sense and would destroy the U.S. government.
I'm guessing I'm going out on a limb here, but I think all the listeners, in listening to Gabe talking about the Department of Government Efficiency, will be reminded on the Monty Python sketch on the Department of Silly Walks. And that's pretty much how this is going to end up, again, going out on a limb, because the numbers don't add up. I suspect what's going to happen.
Well, you're going to have to, Francesco, for the listeners who don't know that sketch, I think you're going to have to explain it.
It's just Monty Python is the kind of farcical, nonsensical sketch group that was very popular in the UK in the 70s and the 80s, and the sketch is essentially a parody of government bureaucracy. It's just the best way to explain that. But go and watch it; it's quite funny. I couldn't do it justice. But the point here being, I think that I think what's going to happen is that the Musk-Ramaswamy combo will claim some sort of victory, which will be a lot smaller than anything like 2 trillion, or even like 1.7 trillion. But this will be, to use your word, Amy, performative, right? They will say that they've cut, a lot of government waste, but they will not have cut anything like that. And there is a serious point, though. The serious point is that actually the US is running a budget deficit that is more than 7% of GDP now, before we do any of this, before we do the tax cuts, before we do the government spending, before we do anything else. So there is an issue here with the budget deficit, and the issue here is with the markets, right? The bond markets have been relatively calm, although bond yields have gone up, which is a sign that investors are a bit worried about this. If this carries on and we see a widening and increasing budget deficit, both in absolute terms as a percentage of GDP, then you're really playing with fire with the bond market. You're just hoping that the bond markets don't have a conniption. And that's just hostage to fortune.
So, looking forward to resuming decades-old arguments about fiscal impulse. But aside from that, a lot going on, and I think everybody's kind of wish casting about what they think the Trump administration is going to be is about to end with rapidity. So on that note, Gabe, Francesco, thank you so much for joining us on the Viewsroom.
Thank you.